The global population will surge to 9.8 billion people by 2050. And in much of the developing world, billions will continue the upward march from lower to middle class, which will increase their energy consumption by as much as tenfold. These factors will increase our global energy demands by 50% or more from today's levels. Add in the electrification of automobiles, robotics, and data centers for AI, and we're staring down the barrel of a massive supply-demand imbalance, one that will likely create significant opportunities for investors. Let's dive in. The world's population currently uses 100 million barrels of oil per day. For context, that's more than 36 billion barrels per year. But do we have the supply to sustain current and future demand? Like an empty container that needs to be replaced, so it is with oil and gas reservoirs. You must replace what you remove with exploration and extraction. We're currently depleting our finite supply by approximately 7 to 8% per year. That's 7 to 8 million barrels of daily supply that we must find and replace each and every year just to keep pace with current demand. Replacing what we pull out of the ground is commonly known as the replacement ratio. Now, ideally, you replace 100% or more of what you extract. In the mid-1980s, we replaced over 200% of what we pulled out of the ground, resulting in oversupply and plummeting prices at that time. In the early 2000s, we replaced approximately 119% of what we extracted, a prudent ratio to add a bit more supply than is needed. But in the 2020s, our replacement ratio stands at a paltry 18%. This is a record historical low. The lack of capital investment in this space, the lack of appropriate energy policy, and the lack of foresight has created a recipe for constrained supply, foreign dependence, higher energy prices, higher food prices, and higher consumer prices. And some of these symptoms are already being felt today. Many have discussed this concept of an energy transition to renewables as if it's a switch that you can just turn on. But this ignores the reality. Today, after roughly 15 years and well over $1 trillion invested, renewable sources like wind, solar, and hydro provide roughly 3% of the world's energy needs. And while we all share in the goal of having cleaner energy sources, we can learn a great deal from history and just how long it takes for humanity to meaningfully add new sources. In the early 1900s, following the production of Henry Ford's first Model T, we began evolving from coal to oil. It took 50 years for oil to reach 25% of global market share, and yet coal still remains the world's largest source of energy for electricity and is vital to the production of things like concrete and steel, paper, and more. In 1938, the US passed the Natural Gas Act to regulate the evolution from oil to natural gas. It also took natural gas 50 years to reach 25% of the global energy market share. And just like coal and oil, 2024 marked another year for record demand. Point being, history tells us that energy sources never truly get replaced. We end up using more of all types of energy. And going forward, we'll need every type of energy source, renewables included, to meet future global demands. As we survey the landscape today, valuations in the energy space are extremely attractive, both in the private and public companies. At their peak, companies were trading at 12 to 16 times earnings. Today, they're valued closer to 3 to 4 times. While there may be opportunities in the public markets, the private markets offer the ability to buy more curated assets. These assets can often provide relatively predictable cash flows and use hedging strategies to protect against unexpected fall in prices. When you have the combination of attractive valuations, a supply-demand imbalance, and a hedge against uncertainties, you may have the ingredients for an outsized return. However, one must proceed with caution as energy is very much a boots-on-the-ground business. Our firm is headquartered in Houston, Texas, the energy capital of the world, and we've learned over many decades that it's critical to partner with proven operators and prudent capital providers when investing in commodities like oil and gas. We invite you to learn more by visiting cazinvestments.com.